if you have to use Nifty as the barometer or a proxy of markets, yes. Mid-cap and small-cap could have certain more pain. If you look at the earnings, which is the third quarter results, 98% of the weight has already declared results, and we've got about 10.2% growth for the Q3, which was not what was expected. A couple of companies actually saved the day. And in the mid-cap space, we have had about 13% growth, still 10% more weight is said to declare results. Small-cap has been a little disappointing from the earnings standpoint, which is just about 6% growth year on year for the same quarter last year.
Okay. Give us your own sense. We had the BSE CEO yesterday on the show, Mr. Sundararaman Ramamurthy, talk about how both the exchanges have a complementary relationship versus competitiveness. The reason I ask you about that is because both exchanges have done very well from a stock market point of view. NSE is, of course, not listed, but generally in terms of volumes and growth. What's the outlook here for the exchange business? Because you also have the commodities exchange in India, which has been a multi-bagger.
Yes, if I look at exchanges, of course, exchanges almost have had a role of quasi regulator in India. If you look at how NSE and BSE have been shaping up over the last few decades, I personally think exchanges are going to be a good business to own because SEBI has put up a couple of regulations which limit the number of expiries on a weekly side an exchange could have. That's why actually BSE has BSE has benefited immensely because the Sensex derivative volume has shot up because NSE had to stop 3 more weekly expiries, which was mid-cap and Fin Nifty and a couple of other bank Nifty. Those 3 weekly expiries vanished from NSE. That pushed a lot of volumes to the Sensex expiry, which is on Tuesday, which is today. So point one I'm making is exchanges are going to be a good business to own. Point one. Point two, the SEBI has ensured that there's not one monopoly in the derivative space, especially for a country this large. NSE was gobbling up all the volumes. That has moved to BSE. That's why you see the stock prices having moved up substantially. The third, in this budget, there was something which can really impact the capital markets. See, everybody's talking about consumption boom because of tax swaps, but I think that's a very small impact. The larger impact is, till date, India sees 90% of the household savings for a particular year into non-equity assets, debt, small savings, insurance, and real estate. Only 7-8% of last year's household savings went into equity. Now that taxation is completely gone out of the picture of investing world, most people will now be free to invest the way they want to. Otherwise, last 3 decades, government has practically forced people to do debt investments and given them tax swaps to motivate them to fund the fiscal deficit. So the transition of how household savings are going to be deployed in India is the actual big fine print of the previous budget which we just saw.